Let's bring in Rob Luna, Wealth Academy founder. Rob Luna himself. Rob, good to see you. Look, multiple Federal Reserve officials speak this week. We start with Waller tomorrow. Obviously, what they say is important because this is the last Fed speak we get before the Fed's blackout period starts on Friday. Here's the list of everyone speaking today. Then you look at the futures, and they're pricing in a 73% chance of a rate cut in March. Rob, I mean, do you think any of these officials will be so dismissive of inflation? Do you see the Fed cutting in March?
Yeah, I don't see that happening. When you look at the Fed's summary of economic projections that came out just in December, they're predicting about 4.76% by the end of the year. We're at 5.5% right now, but like you said, the market's pricing in 3 3/4. So somebody's going to be wrong here. I know a lot of people are expecting the Fed to get a lot more aggressive in the second half. I'm on that camp as well. I don't think you see a Fed cut, but I do think they're going to maybe talk this economy down a little bit, give themselves some room to cut rates in the second half. But I don't think you're going to see that in March.
Yeah, but Rob, the second half of the year, I mean, full-on campaign mode. It's an election year.
Yep.
And that just looks
that's
political.
The interesting thing, right? Yeah, I mean, because the Fed's supposed to be seen as this independent body, and so if they're going one way or the other in terms of rates, in terms of not doing anything, if you see the economy slowing down, which we are starting to see some cracks, or if they're cutting, then that's going to be seen as some type of a partisan move from them. So it is a really difficult situation, and that's why I think you're going to see a lot more volatility. To Nancy's point, I do think this is going to be one of those markets you can buy on the dip. I wouldn't be paying peak prices, but I think you're going to see enough volatility to where if you have your shopping list ready, there's going to probably be some better opportunities in the next couple months.
Talk to me about Coinbase. You just sold your stake in your Coinbase shares, but I want to know why. Because go ahead.
Yeah. Well, we've been talking about Coinbase for a long time. We were talking about here on this show with Charles in the 80s. We had a huge run up in that stock. But a lot of the thesis was, we thought, and people have been trading stocks, not necessarily crypto, have known this for a really long time. The old adage, buy on the rumors, sell on the news. Well, when BlackRock filed to have an ETF, a Bitcoin ETF, the Bitcoin saw a huge run up, and that was really benefiting directly Coinbase, because that's the biggest player in town to go ahead and place your bets over there. However, when you take a look at it, people who own the coin, who are direct owners through Coinbase or in wallets, they've done that already. What we're now looking for is the institutions to come on. How are they going to play that with ETFs? It's going to be the big brokers like Schwab, places like Fidelity. Those are going to see the benefits of the ETF. It's not going to be Coinbase. So
Rob,
in our view, a lot of that run's been done.
The custodian of 8 of the 11 spot Bitcoin ETFs that were approved last week? Wouldn't that be fees?
They are a custodian. However, if you look at the institutions where they're putting their money, it's not at Coinbase. It's at Schwab. It's at Fidelity. Okay. They've got the largest part of that. So I think those assets are going to be allocated right within their own custodian where they're already buying stocks.
I've got 20 seconds. What else do you like, Rob?
I like Cloudflare a lot. It's a new name that we've just started buying actually last week. You talk about security, companies like Palo Alto, CrowdStrike, they're doing security, but they're also doing efficiency, making mobile apps, websites. 20% of the websites out there run through it. I like that, and I really like Netflix right here. They're finally pulling that lever on additional monetization outside of subs with advertising, gaming. I think Netflix is going to go a lot higher.
And they're spending less on content. Because they can.
Absolutely.
They can still grow their subscriber base and spend less on getting in the contact. Rob Luna, thank you.
Thanks so much.